Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. The start of this original big move was generated by the large bright red April to late October 2024 ascending wedge pattern. The most recent large leg up here was from mid-January this year when prices took a fresh flight higher, pushing and closing over the early December 2024 high at 348.35 into new territory such that by early February the market had broken higher out of the December 2024 bullish shift pitchfork that had been running prices higher and over the latest 50% projected Fibonacci line at 402.05. Reaching up to a high at 429.95. Prices then had a pullback into late February and a fresh rise and fall also last week. Now last week's action is significant as the market did not make a new all-time high, thus sowing some low-level bearish doubts, however minor they may be this week as prices barely made it back up last week over the 50% projected Fibonacci line of 402.05 before once again heading lower. All this action has allowed me to draw a dark blue late December 2024 to late February 2025 bullish shift pitchfork. This is a nascent, prospective bullish shift pitchfork, and I will be especially interested to see if the lower time, currently at 378.35, has the desire or application to support the market. So what else? What now? Well, for this I'm indebted to Ray Bradbury for asking me about New York coffee 3 weeks ago, and I went to my longer term charts, the monthly charts, where we can see some possible insights. You see on the monthly charts, the longer term charts, I noticed a pattern that had not been immediately obvious to me at the start of 2025 when I last reviewed these charts. It is a multi-year 2012 to 2024 very large reverse head and shoulders bottom with a bright red neckline on my daily chart, on my monthly chart I should say, currently at 273.80. The break higher over this neckline has already reached its primary target, but it has still open the secondary much harder to reach target X up in the 433.35 area. What is interesting about this is that nearby is the next 100% projected Fibonacci line at 433.75, quite close in the scheme of things. So what does this mean? Does this mean the market will turn at these levels? I could not say, not yet, though we did have a possible shooting star pattern last month, and I'm wondering right now if we're trying another attempted shooting star pattern this month. Now, shooting star patterns are usually seen as bearish, though there is a bullish variety. What I can say is that if there was ever an area where the market could hesitate on the top side, then this 433.35 to 433.75 area would be a reasonable choice. I'd watch out for that area and any approach to that area very closely. London coffee. 14 weeks ago I drew a new large pattern that encompasses all the recent significant elements. It's not ideal, it is quite large, but it does show promise. It's a bright red, shallow, large bull channel, currently 46.44 to 59.53. Now within this pattern sits another pattern, just about, an early November to early December 2024 bullish shift pitchfork highlighted in dark blue on my daily chart. Right now prices are testing for a second consecutive week the combination of the dark blue lower time, currently at 53.68, and the slowly rising green short medium moving average, currently 53.57. This shallower dark blue bullish shift pitchfork has shown the bullish angle attack of this market, and the support seen from the lower time back in mid-January and arguably over the last 2 weeks does add some legitimacy to this pattern, though as we can see it is being tested. The only issue is, as I said 2 weeks ago, and I quote, that a dark blue middle time crosses over the bright red upper bull channel line next week, so that is last week. And I continued, and that is something to watch and bear in mind. End of quote. Why watch this crossover, might you ask? Well, it's because such crossovers prompt volatility in the market, and in truth, that is what we had last week. There are also two other patterns to consider, both of which I pointed out 3 weeks ago. There are a late January to late February small ascending triangle, highlighted in bright green on my daily chart. The prices broke down and away from, and thereby created the second pattern, a double top, for the same period, an Adam and Eve double top. I added a comment 3 weeks ago about these patterns, and I quote, "Watch this space very carefully, as I suspect this market may make a very important statement soon." End of quote. Well, both primary and secondary targets for this ascending triangle have been reached, and as for the double top pattern, the primary target was reached 2 weeks ago, leaving only the secondary hardest to reach target X at 51.28, still open. This target is just above the small congestion zone seen in late December 2024 to January 2025, roughly between 48.40 to 5100. That also formed a small double bottom, as well as just containing the slowly rising medium moving average, currently 1593. However, to achieve that, prices need to first break down through that previously mentioned green short medium moving average and dark blue lower time, which, to be honest, they have been trying to do now for 2 weeks already.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.